It's time for Operation Freedom with your host, Dr. Dave Janda, on Southeast Michigan's conservative powerhouse, WAAM Talk 1600.
Welcome back to Operation Freedom, folks. I'm Dr. Dave Janda, broadcasting from our Freedom Bunker here at WAAM Talk 1600. Podcasts will be available for our premium service subscribers, 30 cents a day, biggest bang for the buck in all the internet, in addition to all the other content that we have at davejanda.com, including the Insider Insight Show, Department of Advanced Research Show, our archives across the board, not just on this show, but on our Insider Insight Show with phenomenal guests. And on this website, we will have featured an interview that was released this morning that I did with Greg Hunter. And we tackle a number of different issues, that being this Iran, quote, deal, end quote, some financial issues, some issues as it relates to what's happening behind the curtain with the fake Russian dossier and the fake Russian Trump collusion stories. Information that I have gleaned through contacts that I've made through with people that I've grown to trust, is the operative word, over the past 30 years of my career, who are fighting for your freedom behind the curtain against the globalist structure. As we've outlined today, we want to focus on what's happening in front of the curtain as well as behind the curtain as it relates to your financial and your economic health, well-being, freedom. I believe you're not given an indication of what's really happening if you listen to the bought-off lamestream fake media. We've addressed that issue with last half hour with Rob Kirby, one of the best, I believe, forensic economists in the world. My next guest is also involved in financial markets, and she really is an incredibly courageous individual by coming forward and trying to pass her knowledge base onto you and her experiences onto you. She goes by the name de plume of TraderStef. Let me give you a little background on Steph. Beginning in 1996, TraderStef initiated a career spanning 14 years within the New York City investment banking industry. She acquired a diverse skill set in human resourcing, technology, and communication, training, education and development, business analysis, and global risk. She began investing in precious metals in 1999 while following market trends post-dot-com bubble and 9/11. Steph then left the banking industry in 2009 after 5 years in global risk management at Citigroup. Steph then developed and hosted a live Precious Hour webinar specializing in gold, silver, and the mining equities, combined with research of industry fundamentals, financial markets, global news events, geopolitics, and monetary policy, otherwise known as fusion analysis. Her work is featured on a phenomenal website, crushthestreet.com. crushthestreet.com. The information she puts forward on a regular basis on that website is, I believe, second to none. It is incredibly analytical. It's incredibly insightful. And there's always a direction to her work. I'm honored to have her back with me. Steph, welcome back to Operation Freedom.
Hey, Dr. Janda. Thank you for having me back. How are you today?
I'm doing okay, Steph. Now, let's talk about fusion analysis, because I know it's your contention, and I agree with you on this. Fusion analysis is more important than ever, I believe, to every person who is invested or has an interest in the financial markets.
Absolutely. So, look, when folks are out there, let's stick with gold and silver, but I'm going to focus more on silver today for everyone out there. When you're speculating in the paper playpen, as we call markets nowadays,
yeah.
or making actual physical coin purchases, say you're a silver stacker, investors should be prudent, to execute at lower price points with a low risk and a high reward setup.
Right.
Rather than just say blindly buying or just doing dollar cost averaging. Retail investors historically have the habit of doing the opposite, and they buy high and then they sell low, which is typically based on emotions rather than real-time information or data. And technical analysis provides that insight where the fundamentals fail. So fundamentals are great, but as an investor or a trader who's, say, scalping, which is an intraday trade, or swinging, which is being held overnight or for an extended period of time, or you're laddering a core positions, that's kind of like dollar cost averaging or silver coin stacker. If you're not learning and using at least basic technical analysis for reading stock charts and patterns, you're missing out on a really big piece of the equation. So don't fund a mental case, is what I like to call it. And, the markets have changed over the past few decades.
Right,
it's no longer your grandpa's or your dad's market on so many levels. So investors who are trying to sort through this mess by only using fundamentals were left in the dust years ago. And depending on the source that you reference, up to 85% of all the trades that are executed in the paper playpen are done by automated trading platforms. So, to give you a quick idea, just some recent headlines, 10% of trading is regular stock picking at JP Morgan. High-frequency algo trading is taking over the markets. The quants, the guys who program these algorithms, are considered rocket scientists of Wall Street. The old-fashioned outcry big trading pits in Chicago, they're gone. They went out with the horse and the buggy. And computer engineers now make up 25% of Goldman Sachs workforce. And the president quoted I think it was last week, April 30th. He said, "Ours is a business of information. Pattern recognition and historical context are important." And equity trading 15 to 20 years ago, we had 500 people making markets in stocks. Today we have 3.
3.
So fundamentals do remain a stable variable because they always win in the end. All right? And that's the problem you have in the head when you're thinking about this, which is why I promote fusion analysis. So with the current automated trading environment, you got new variables. You got algorithms, you got high-frequency trading platforms, and now you've got artificial intelligence coming into the picture, which is kind of like distorting the picture for fundamentals. So it's important to note that the algos are also reading and looking for specific words in the text of news feeds and breaking news headlines. And they're databasing all the articles to learn from for future reference. So that's why when we have events like the Fed's monthly meeting or what they're going to do with interest rates, there's like an instantaneous reaction on the stock charts in a nanosecond. It's because it's all algorithmic trading, practically all of it. So that is why there's a lot of folks out there who trade and they use like automatic sell and buy orders. But that can work against you because they don't always get filled when prices are moving really quick, and it leaves you behind. In worst case, you end up trying to manually chase the price upward because you missed your planned entry point or the other direction. So, the computers see everything. They see all the orders in the queues, and sometimes they'll go just below or above a popular price point, and then they're immediately pivot back up or down and bypass it. If you would have just held your ground and kept in the loop of what's going on in the markets, instead of relying on the machines to make your decisions, you may have saved yourself a lot of time and money. So the quants are also programming every possible technical indicator that's ever been used, proven, developed, and fine-tuned for over a century by all the seasoned traders and all the legends. But the difference is sometimes they can produce some results that are very worrisome, like flash crashes that now occur with regularity, sometimes on a daily basis with individual stocks, and during those well-publicized huge plunges in the stock indices overall. And that's caused by a number of reasons, and it's usually because it's following the trails of automatic buy and sell orders, and then the liquidity dries up, and then you get these huge up and down, gaps. So it can be a nightmare out there.
So what do people do, Steph? I mean, people are sitting there going, okay, look, I got my 401k, I got my IRA, I got some other income that I have that I want to invest in the stock market. And gosh, when my dad used to do this, he used to call his stockbroker and buy, X number of shares or whatever. And so that appears now I'm playing, if 85% of trades are by machines or the computer driven, how do I do this? What do I do?
Well, when you throw the word out technical analysis, sometimes people get afraid. It's like, oh, it's a complicated word and it's about math and equations. It's actually not that difficult if you just know the basics. So it's really important that you get a basic understanding of what it is and pay attention to it, and at least follow someone who's doing it to kind of get an idea of what it's all about. Mm-hmm. So like using candlesticks and patterns to predict the future may seem like witchcraft, but, does it actually work? Well, yeah, actually most of the time it does, about 75%, sometimes more, sometimes less. And most technicians are part of big institutional investment teams that employ a mix of styles to find whatever works best. But those teams are shrinking as automation takes over, as, we pointed out earlier. So technical analysis basically boils down to predicting the future by studying the past. Now, there's a lot of different things that go on with technical analysis, and I've got some favorites, and it's generally what most technical analysts use. You got exponential moving averages or simple moving averages, Fibonacci levels, and then patterns like triangles and pennants and flags. So that's all beginning to dominate the platform. So I sent you a couple of images of two stock charts, one that was a computer-driven stock chart on an intraday basis and one that was obviously being done by primarily humans. Did you see that?
I did.
Yeah, it's just amazing the stark difference. You can see what's going on.
Right.
So if we let's take the silver market. And recently I put out an article on April 23rd about silver because there was a lot of talk out there in let's say, the community, the people who follow silver and gold, that silver was about to skyrocket at any moment. Mm-hmm. And they were talking about the gold to silver ratio, and they were talking about the commitments of traders reports, and it's never been like this. And then you look at all the fundamentals. I mean, there's so many great fundamentals for silver right now. You just cannot argue with that. I could go down the list and spend an hour with you. But when I opened up the charts, I saw something completely different. So I had to take that into consideration. Was this the right time to maybe buy a little bit more, whether it be paper or actual physical silver? Well, I suggested that you wait. So, silver's been having a difficult transition to get out of its primary bear phase ever since, falling out of its grace in 2011. But when you look at the charts, the Commitment of Traders report, based on what was being said, you could go back 20 years and look at the history when there was a time that it looked similar, but the price went down. Mm-hmm. And then there were times where it looked just the opposite, and that's when the price skyrocketed past $21.50 and ran up to $50. So when I pulled out the charts and I looked at the charts, I'm like, that really doesn't look that well, and it's had a pretty good run up in the past few weeks, but, that volume is just collapsing. And that's one of the things in technical analysis that you follow. If you have price that's rising and the volume is falling while that price is rising, that's not a very good sign. But if the volumes are increasing as the price is rising, it's probably a good bet that that price is going to continue to run a little bit further. So you have to take a lot of those variables into account when you're making those decisions. And I've consistently said that silver's fundamentals may be great, and when it gets running, it'll run like crazy. You're not going to stop that pony because silver made its all-time high before gold did in the past, if we recall, 2010, right. 2011. But not until gold takes out that magic Fibonacci level of 1380 that has been getting close to or banging up against since around 2013, until it takes that out decisively, I don't think silver's really going to do anything. Now, I'm not saying that it's not possible, because some event could happen, some black swan in the markets could occur, but gold's going to run at the same time anyway. And my favorite number, and I'm not saying that everyone should wait for 2150, but I think that's a really important number because it was a very important number twice in the past. So now at a lower price point, yeah, it is a good time to buy, but you also, if you're looking at the charts, you want to buy at the lowest price possible. Now, I'm not saying bottom calling or top calling, but when a price fluctuates within a week after I posted that article, it went down by over $1. Mm-hmm. That's a big difference. If you were buying, let's say, 1,000 ounces, that's $1,000.
Mm-hmm. It's definitely a big deal.
Sure.
So what's the best way for folks to follow, for example, your technical analysis? They can do that, correct?
Oh, absolutely. I've actually just started a website, and there's several ways that you can find me. The easiest way is if you went to crushthestreet.com, and under TraderStef, I have a whole list of articles, and at the end of every article has a link to my Twitter feed as well as my website. And my Twitter feed is TraderStef, that's STEF, and my website is TraderStef.wordpress.com.
So, Steph, when you look at precious metals markets, for example, there's evidence that large sovereign entities, Russia, China, India, are buying large quantities of gold and silver. And it appears, at least from commitment of trader data and the like, and data about movement of physical precious metals in and out of warehouses, that large banking institutions like JP Morgan Chase and Goldman Sachs are also buying significant quantities of gold and silver.
Yeah.
So basic economics tells us if the supply is relatively constant but demand is going up, many people are saying, well, why are I not seeing some type of price appreciation in the physical metals? Is it because their technical patterns are just not optimal? Is it what's happening?
That's the $1 million question, number one. But it's a very common one, and it's a good question to ask because I ask myself every day that I'm looking at the charts. And it's a combination of variables. Look at the U.S. dollar. Generally, in the long term, when the U.S. dollar is going down, the price of gold is going up.
Right.
And with that, silver is going to follow.
Right.
And then we have the opposite. Then we have the electronic trading algorithms that are mindlessly making decisions, just strictly based on technical analysis. You're not getting that intuitive thought process like George Dyson. He's a historian, and he did a quote once. He said, "No individual deterministic machine, however universal this class of machines is proving to be, will ever think in the same sense that we think. Intelligence may ever be increasing among such machines, but genuinely creative, intuitive thinking requires non-deterministic machines that can make mistakes, abandon logic from one moment to the next, and learn. Thinking is not as logical as we think." So then we have the manipulation in the market as well. But that's just because the price is going down doesn't mean it's being manipulated. Because sometimes you can tell when that's actually happening. It's very obvious in the charts. Let's say if the U.S. dollar is going up, let's say the U.S. dollar is stable. It's actually stable to flat and there's nothing happening in it. And at a certain point of day in a certain market that's opening, suddenly the price of gold plummets 10 or 15, maybe $20. Called the mini puke. It's obvious that something is going on there. So that's where, technical charts help you make those decisions. So there's a lot of variables that answers that question. There's no one answer to it.
So, Steph, if 85% of the trades are being done on a computer platform, correct, or algorithms or whatever, if I'm a criminal manipulator, right, it becomes pretty easy for me, doesn't it? If I have an algorithm that's, let's say, drives the dollar higher and linked to the fact, or interest rates higher, or the Japanese yen versus dollar if linked, and I have it linked so that when that happens, the price of gold and silver plummets, and if I'm going to be in the market for gold and silver, I can step in and buy it on the cheap.
Yeah, exactly. There were algorithms that were running back in 2009 and 10 before the big run-up where when the price of gold was going up, gold stock prices were going down, the miners. So, those programs come a dime a dozen because there's so many of them out there. It's really hard to tell, which way is up and which way is down at times. But like I said at the beginning of the interview, the fundamentals always win in the end.
Right.
The goal is to buy at the lowest price possible with the least amount of risk. Upside risk.
I did this interview.
I'm sorry.
I did this interview earlier today. It was released today with Greg Hunter, and we were talking about some financial market issues. And he said, we were speaking about gold and silver, and he said, well, what do your sources say? When does all this end? When does this? When are they finally going to break free, gold and silver? And I go, I don't know how to tell you. I don't know an answer to give you. I don't know an answer. But this is an answer I will give you, and you can set me straight, Steph. I said, in the history of the world, I don't know of a manipulation that has ever lasted forever. And that in the end, market forces will always win.
The market is always right, which is why the charts are always right. They're not, despite what may be going on in the background, or whether it's actual paper and it's not physical that's being exchanged, right now in our current reality, that chart and that price is reality. So if you're going to, you need to get with the program, pun intended.
Right.
And realize that you're going to be making those decisions based on the value of fiat paper of what you're buying that gold or silver at or with. So you want to be able to make the best decision possible while you're making that purchase, but knowing in the end that the fundamentals do always eventually win.
And Steph, you mentioned in the gold market, 1380, silver 2150 as being the magic numbers. When those are breached, does your technical analysis, does your fusion analysis tell you what type of prices we're looking at?
No. I can't tell you how high it's going to go and how fast and for how long, because the market is a living, breathing organism. But based on the fundamentals, gold should be around 10 grand. Now, keep in mind, I said should be. Mm-hmm. That's emotions. Despite its factual data that I can verify that that's where the price actually should be, it's not there, and it probably won't get there very quickly. But I could be wrong. Something could happen.
And that's about an eightfold increase from where it is now. Would silver be the same, or would it be even greater than that?
Now that's where the fundamentals will come in, because it'll depend on the supply that's available.
So, Steph, again, how can folks follow you, because they need to follow your work?
If you're on Twitter, hook up with me over at TraderStef, and that's with an STEF at the end, over Twitter. And you can see my profile where the link to Crush the Street is, as well as my website.
Steph, I'd like to thank you for everything you have done, are doing, and will do. You truly enhance the financial security, the economic security, the financial freedom of every person willing to listen and every person willing to read the incredibly analytical, important work that you do on a regular basis. CrushTheStreet.com. Follow her on TraderStef on Twitter as well as her new website. Folks, you're listening to Operation Freedom. I'm Dr. Dave Janda.